Imagine the market as a giant balloon floating on the gas of cheap money. Suddenly, the Federal Reserve decides to close the valve and air begins to leak. Bitcoin, which many considered a safe haven, is the first to feel this pressure. The drop is not an accident, but the direct result of a gear in motion. The Federal Reserve, the American central bank, holds the power over capital costs. Recent decisions to keep interest rates elevated have changed the course of the game. When rates rise, money stops being a free fuel for speculative risk. The American investor now looks for safety before looking for easy profit. Bitcoin thrived in an era of abundant liquidity and near zero interest rates. It was the perfect setting for speculative assets to grow without breaks or ties. But the scenario changed when inflation in the US forced the government to act. Withdrawing excess money from the economy dried up the spring-feeding crypto. When US Treasury bonds start yielding more, risk loses its logical sense. Why risk it in a volatile asset if the government pays you well to stay still? Large investment funds are moving billions of dollars in that exact direction. This capital migration is the technical route behind the red candles on the chart. The risk appetite of American investors has undergone a profound transformation. Euphoria has given way to cold analysis of balance sheets and short-term views. Bitcoin, because it generates no interest or dividends, becomes less attractive. It relies exclusively on the entry of new buyers to sustain its market price. If liquidity decreases, trading volume falls, and volatility increases rapidly, small selling movements now cause great damage to the overall market value. Financial institutions, which used to buy, are now realizing their profits. They need cash to face a scenario of much more expensive and restricted credit. The impact for the population is the perception that digital money is not immune. Many Americans use Bitcoin as a way to hedge against rising inflation. But what we see is that it behaves like a high-risk technology stock. It falls when the traditional financial market decides it is time to protect itself. Regulatory uncertainties on American soil add more fuel to this fire. Every new investigation or proposed rule creates a climate of general distrust. Institutional investors hate the lack of clarity regarding the future of laws. This prevents new capital from entering to stop the current free fall of prices. The cause is rigid monetary policy. The effect is the devaluation of the asset. As long as the Fed does not signal a real drop in rates, pressure will stay strong. The crypto market is learning that the dollar still dictates the global rules. Bitcoin's autonomy is tested by the gravitational force of the American economy. In the short term, the trend is extreme caution and a search for capital preservation. The investor who entered at the top now faces the pain of market correction. The liquidity left over from the pandemic period was totally absorbed by the system. What remains is a leaner market, more technical and much more merciless. Bitcoin is facing its first major high-interest rate cycle in the United States. It has never been tested in an environment where money has a real and high cost. This trial by fire will define if it is truly a reserve asset or just hype. The behavior of the coming months will be crucial for the long-term narrative. Many analysts watch the behavior of the whales, the large holders of coins. When these whales start moving assets to exchanges, the alarm is turned on. This usually precedes massive sales seeking liquidity in times of crisis. The small investor ends up being the counterparty that absorbs the movement's losses. The connection between the stock market and Bitcoin has never been closer or riskier. They walk together, reacting to the same employment and inflation reports. If the Nasdaq Technology Index falls, Bitcoin tends to follow the same path. The diversification that Bitcoin promised seems to have vanished under high rates. The opportunity cost of holding Bitcoin increased considerably in 2024 and beyond. Holding money in a falling asset costs double when interest rates are yielding. This simple math is pushing short-term speculators out of the sector. Only those who believe in the technological thesis for the next 10 years remain. The Federal Reserve monitors consumption, but the asset market is its thermometer. They know that the negative wealth effect reduces the population's urge to buy. If cryptos and stocks fall, people feel poorer and spend significantly less. This helps the government control inflation, but destroys the wealth of many. The digital gold narrative is being put to the test against real physical gold. In times of war and uncertainty, the golden metal has performed better than code. This shift in preference reflects the fear that technology might be vulnerable. The investor seeks what they can touch when the global economy seems uncertain.
Have you ever stopped to think that the videos you just watched with flawless scripts and engaging narrations might have been created by someone who never even touched a camera or a microphone? There is a new digital elite profiting heavily behind the scenes of YouTube and social media, building massive channels without ever showing their faces or spending thousands of dollars on equipment. While most people are frozen by the fear of being on camera, These individuals are using the hidden power of artificial intelligence to generate automated content that works and earns for them 24 hours a day. The secret to dominating this game isn't about having a famous face. It's about knowing how to command the right tools to create scripts, voices, and visuals that magnetically hold the audience's attention. I've gained access to a strategic method that reveals the exact roadmap for you to build your own invisible digital empire. Mastering AI to turn clicks into a real source of income. It is the perfect opportunity for those seeking financial and geographical freedom without having to deal with the pressure of being a public figure on the internet. Best of all, you can seize this opportunity right now for a symbolic price. The complete training is under an exclusive promotion, dropping from $97 to just $17. This is your passport to unlocking the knowledge you need to start your professional journey with AI today. Click the first link in the description to secure your spot while this discount is still active.
Bitcoin's volatility is a double-edged sword that is now cutting the profits side. What used to bring gains of 100% now brings losses of the same size. Without the support of government liquidity, the price seeks its real market value. No one knows for sure where the bottom is in a regime of high interest rates. The crypto market structure also suffers from the lack of new entry flows. Bitcoin ETFs brought institutional capital, but also brought an easy exit. Now, Wall Street capital can be withdrawn with a simple click on a computer. The institutionalization of Bitcoin made it more stable, but also more predictable. The US macroeconomic scenario is the screenwriter for this story of fall and pain. Every Jerome Powell speech is analyzed in search of a single word of hope. But the Fed has been emphatic. Inflation must die, whatever the cost, and the price of that death is the deflation of risk assets across the territory. In the long run, some believe this market cleanup is actually something healthy. Eliminating projects without foundation and investors without strategy builds base. Whatever survives this crypto winter will be more resilient and ready for the future. But the cleanup process is painful and leaves scars on many investment portfolios. The psychology of the masses also plays a fundamental role in the current drop. The fear of losing everything quickly overcomes the greed of gaining a little more. When price support is broken, the herd effect accelerates the devaluation. Social networks amplify this sentiment, creating a downward spiral of pessimism. Understanding the root of the problem in the US is essential for any strategy. One cannot invest in digital assets while ignoring the strength of the central bank. The economy is an integrated system where Bitcoin is just one small piece. The move of the king, the dollar, still decides who stays and who leaves the board. The withdrawal of liquidity also affects exchanges and the sector's infrastructure. Less volume means fewer fees and less profit for the ecosystem's companies. This can lead to new solvency problems in less prepared crypto firms. Systemic risk still hangs over the digital asset market as a whole today. The outlook for the coming quarters depends on the American inflation trajectory. If consumer prices stay high, the Fed will be in no hurry to cut rates. This means that Bitcoin could face a prolonged period of sideways movement. The investor will need patience and a long-term vision to resist the pressure. The shift in risk appetite is not something that reverses from one day to the next. It takes time for confidence to return after such a significant and technical drop. The market needs a new positive narrative to attract fresh capital again. Until then, macroeconomic fundamentals will continue to be the primary driver. Following Fed decisions is more important than following the software code. Bitcoin is an innovative technology, but its price is an economic phenomenon. Cause and effect, high rates kill speculation and favor real savings. This is the natural cycle of the economy that many forgot during the last decade. Keep your vision focused on official data and escape the noise of the headlines. The fall of Bitcoin has a logical, mathematical, and totally predictable explanation. Protecting your wealth requires understanding these movements before they happen. Quality information is your only shield against current market volatility. The future of Bitcoin in the US will pass through much more rigid regulation. This could decrease volatility, but it could also limit explosive gains. The market is maturing, and the price of maturity is the end of the wild era. Prepare your portfolio for a scenario where security is worth more than the bet. The resilience of the dollar surprised those betting on the currency's collapse. Bitcoin has not yet managed to prove it as a viable substitute for common money. It remains an investment asset, subject to the same laws of supply and demand. And the supply of dollars is being controlled with an iron fist by the government. Analyze your risk exposure and see if it matches the high interest rate scenario. There is no shame in seeking safety when the financial sea is far too rough. The smart investor survives to fight the next bull cycle of the market. Learning from the fall is the best investment you can make for yourself. Bitcoin will rise again one day, but the rules of the game will be quite different. The era of free money is over, and the natural selection of the market has begun. Focus on companies and assets that have real value and generate actual cash. Technology is the future, but prudence is what keeps you alive in the present. We are living through a historic moment of readjustment of global value expectations. What happened to Bitcoin is just a reflection of a much larger movement. The United States is reaffirming its sovereignty over the financial system, and all assets, digital or not, must bow to this harsh economic reality. The Fed will continue to be the protagonist of every finance video for a while. Understanding its reports is what differentiates the professional from the amateur. Liquidity is the blood of the market, and the central bank is the heart that pumps. If the heart beats slowly, the entire economic body feels the lack of energy. Do not ignore the signals coming from inflation and employment data in the US. They are the true indicators of where the price of Bitcoin will go next. The current fall is just the market's response to a hostile rate environment. Keep your cool, study the fundamentals, and always protect your principal capital. The investor's journey is made of constant learning and root adjustments. Bitcoin is a potent tool, but it must be used with wisdom and extreme caution. The American scenario dictates the tone, and the rest of the world follows the tune. Be the conductor of your own financial life by analyzing the facts coldly. The crypto winter may be long, but it always ends with the arrival of spring. The question is, who will have the financial breath to reach the next step of the rise? The withdrawal of liquidity is temporary, but the destruction of capital can be fatal. Manage your risks today to reap the rewards when the tide eventually rises. Blockchain technology continues to evolve independent of the market price. The real utility of the network will be what gives Bitcoin value in the very long term. But for today's video, the focus is your wallet and the reality of current rates. The scenario is one of caution, but also of study for those seeking opportunities. It has never been more important to have a clear strategy and not act on pure impulse. The market punishes those with no plan and rewards those who know how to wait. The fall of Bitcoin is a practical lesson on the power of global macroeconomics. Use this knowledge to your advantage and do not let the fluctuations beat you. The United States, under the focus of interest policies, continues to move the world. Bitcoin is just another passenger on this high-speed economic train. The final destination is still uncertain, but the tracks are made of data and facts. Watch every station carefully so you do not miss the right moment to disembark. Data transparency is your greatest ally against irrational market fear. Know why it falls so you can know when it might return to rising with fundamentals. Economy is not a seven-headed beast. It is simply cause and consequence. The Fed caused the lack of air. Bitcoin is the one currently trying to breathe. Prepare for more volatility as elections and new data points emerge soon. The American market is dynamic and reacts to every new piece of info with intensity. Bitcoin will be the thermometer of these reactions for a long time in the future. Stay informed to make the best decisions for your personal wealth and assets. Today's analysis sought to bring the clarity that price charts often hide. Do not just look at the value, look at the motive behind every single move. The root of the problem is in interest, liquidity, and U.S. risk appetite. Understanding this is the first step to becoming a truly elite investor. Financial education transforms the way you see every single market drop. What looks like a disaster to some is just a technical correction to others. Be part of the group that understands the why and prepares for what is next. Knowledge is the only asset that never loses value, regardless of the Fed. Thank you for following this deep and detailed analysis of Bitcoin's move. The American scenario is complex, but with study, we can navigate through it. Always follow official reports and keep your feet on very firm ground. The future of investments belongs to those who seek the truth in the numbers. Every stanza of this script was designed to give you a macro and clear view. The fall of Bitcoin is a pedagogical event on how capital truly functions. Do not ignore the lessons that the market is trying to teach you at this moment. Financial success is built with patience, data, and a lot of discipline. The dollar and interest rates will continue to be the stars of our technical analysis. There is no escaping the gravitational pull of the largest economy on planet Earth. Bitcoin is part of this system and will suffer its influences for many years. Be resilient, be technical, and never stop searching for quality information. We have reached the end of this journey of knowledge about the market drop. I hope the points discussed bring light to your next financial decisions. The market is sovereign, but you are the master of your own financial destiny. Stay vigilant and stay focused on what truly matters for your future. What do you think about this Bitcoin scenario and the Federal Reserve's control? Comment your opinion, subscribe to the channel so you don't miss anything, and leave a like.